Well, yes, the union budget is just around the corner, and let's understand how the government makes its money and how the government spends its money. So when it makes its money, it's called budget receipts. Let's understand this. Let's put it into context by saying for every 100 rupees that the government makes, 24 rupees comes from borrowings and liabilities, 22% or 22 rupees rather is contributed to by income tax, 18 rupees comes from GST, 17 rupees comes from corporation tax, 9 rupees comes from customs and excise duties, another 9 rupees comes to non-tax receipts, and the last 1 rupee comes from non-debt capital receipts. That makes up a pie of about 100 rupees of the government's income. On the flip side, let's see, if the government is spending 100 rupees, then 22 rupees out of that is going towards state's share of taxes and duties, 20 rupees goes for interest payments, 16 rupees make up central sector schemes, excluding defense, and major subsidies are part of this. Defense spending is 8 rupees out of the entire 100 rupee pie. Finance and commission make up another 8 rupees. Other transfers make up another 8 rupees, and centrally sponsored schemes also account to 8 rupees. The last 10 rupees come from major subsidies and pensions, 6 rupees from subsidies, and 4 rupees go towards pension. So that makes up a 100 rupee pie when it comes to government spending. Let's understand some important terms, 6 very important terms to know to understand what the income and expense look like. Let's talk about revenue receipts, regular recurring income of the government. They neither create a liability nor they reduce any government assets, and this include income tax, GST, and non-tax revenue, that's dividends, profits from PSU. So that's tax and non-tax revenue, both are part of revenue receipts. On the flip side, let's understand what capital receipts are. Non-recurring funds received by the government that either create a liability or reduce assets. They could be government loans or the disinvestment proceeds, for example. Next up, let's understand what government capital expenditure is. Money spent on creating or acquiring long-term assets, could be road, building, machinery, defense, and the infrastructure of the country. On the flip side, revenue expenditure is money spent on day-to-day activities of the government, daily operations, essential public services and administration, like salaries and pensions for government employees and subsidies provided. So that's an example of that. Fiscal deficit, on the other side, when a government's total spending exceeds its total revenue, excluding borrowings in the financial year, it means the government is working in a deficit. And on the flip side, lastly, a fiscal surplus is when the government collects more revenue, that is primarily in the form of taxes, than it spends in a financial year. So the government's income is more than its expenses, which is rare to see. But yes, that's the meaning of a fiscal surplus. And these are some important terms you need to know just as we're nearing the Union Budget 2026.